In today's video, I'm going to be showing you how to use Bookmap for high probability trades. But real quick, as always, if you guys do find value in today's video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so very quickly, once you're signed up for Bookmap and you open up Bookmap itself, you want to head up here to where it says connections, and you want to make sure that you add the Bookmap data. And then if you trade stocks, you want to make sure that you have DX feed. Now from there, what you're going to do is hit add instrument, and you're going to type in the symbol that you want to use on Bookmap. So if you're trading futures and you want to pull up the S&P 500 futures, you would make sure to select Bookmap data, make sure it's futures, your exchange, which is CME, and then we are currently on the ESZ5 future. Then from there, you'll just subscribe to the instrument, and once subscribed, your chart is going to look somewhat like this. Now, there are a few customizations that I'm going to suggest that you do, because by default, your Bookmap is probably going to look something like this. Sorry if I'm blinding anybody, but what you're going to do is head up here to where it says contrast black cutoff, and you want to make sure to put that all the way to the end. Now, what this is going to do is it's going to eliminate a lot of the orders that we don't really care about and only filter the largest amount of orders. Now, I personally put my heat map on the brightest. Again, it's personal preference where you want to put it, but I keep mine on the brightest. And then as far as the volume dots, honestly, it's up to you how big or small you want to make them. I keep mine right around here. Now, one more thing before I show you guys how to actually use Bookmap, because I get asked about this a lot. By default, when you subscribe to Bookmap data, you're going to get a weird looking chart, as we can see here with the NQ futures. And essentially what this is it's an algo that's messing with the data and the way that it's shown on Bookmap. So what you want to do is head up here to where it says configure add-ons, scroll all the way to the bottom to where it says manage add-ons. And then you want to scroll down until you find what is called Trader Map Lite. Then from there, make sure to install it. And then when you're on the instrument that you want to use, if you're on the S&P futures or the NASDAQ futures, go back into configure add-ons and you want to select Trader Map Lite. Now, what this is going to do is it's going to get rid of that bot, and it's only going to show you the actual orders within the market. Now, how do we actually use this tool to identify high probability trades? So if we are looking at the order flow on the NASDAQ futures, you can see that we have these volume dots right here, as well as the shaded area right here. Now, what the shaded area is on Bookmap is these are limit passive orders within the market. Now, what is a limit passive order? Well, a limit order is somebody who is saying, I am only willing to buy or sell at this specific price. So if you were trying to sell the NASDAQ futures and you put in a limit order at 24,925, for example, you would be a passive seller. If you were trying to buy the NASDAQ futures and you put in a limit buy order at 24,885, you would be a passive buyer. And that is exactly what these shaded areas are. They are passive buy orders or they are passive sell orders within the market. Now, why are these used? They are used because large institutions cannot do market orders. What a market order is that is an aggressive order, and that's what's being shown within these volume dots right here, which we'll come back to. But because institutions use a larger size within the market, they cannot do market orders without moving price significantly. So what these institutions do is they rely on limit passive orders to get their orders filled, whether that be on the buy side or the sell side. And we can typically use these limit orders to understand where the buyers and sellers are within the market. If there's a lot of sell orders going up into a key level, there's a good chance that price is going to reject. Or if there's a lot of buy orders going down into a key level, there's a good chance that price is going to bounce. And again, we'll come back to that. But for the time being, remember the shaded area is passive buy and sell orders within the market. Now, the way that you can tell if they are buy orders or sell orders, let's just pull up the S&P futures, is first by looking at this white line right here. This white line right here is the last price. So the last area that price traded. Well, if the shading is below the current last price, those are limit buy orders waiting to get filled. If the shading is above the last current price, those are limit sell orders. So again, if the shading's above, it's sell orders. If the shading is below, it's buy orders. So that's a very easy way to tell, are there buyers or sellers at the level? Now, I want you to imagine that we come down into, let's just say this was a demand zone right here, and we start to notice that there's a lot of shading. Well, because we're trading down into a demand and we see a lot of shading, we know that there's a lot of buyers. If there wasn't a lot of shading, then there's not a lot of buyers. Or if we came up to a reject level and there's a lot of shading to the upside, well, guess what? There's a lot of sell orders up there. If there's not a lot of sell orders, there's a very low probability that price is going to reject. So now how can we tell the amount of buy orders and sell orders at a specific level? Well, if we go ahead and we look up here at this color shading wheel right here, the further to the left the shading is, the least amount of orders. The further to the right of the shading, however, the more amount of orders. So personally, when we are going into bounce levels or reject levels, I'm really looking for like orange, dark orange, red, and dark red. That is going to tell me that there is a massive amount of orders sitting at my key level. Now, it's not like a specific number is going to trigger the shaded area in correspondence to the color. It's more so the amount of orders sitting at that overall area when compared to other orders in the area. So like, for example, there's a lot of buy orders right here compared to the rest all the way down here. Or there's a lot of sell orders right here compared to the rest of the orders up here. So for me personally, my picture perfect A+ setup is when we trade into a key level, because I'm really big on either trying to reject price or trying to bounce price. Personally, I just see the best risk to reward at those areas. But I would like to see a lot of buy orders if I'm looking for a bounce, or a lot of sell orders if I'm looking for a reject. The reason being, again, it is showing you that there are market participants that are willing to buy or sell at those key levels. And what we can do is, if those orders are there and we get confirmation to take the trade, our stop loss can be on the opposite side of the orders, which takes me into my next point. I previously mentioned that there are aggressive participants in the market as well. An aggressive participant is somebody who is hitting buy market or sell market, which is essentially saying, get me into this trade right now at the best price possible. Sometimes you're going to get filled higher than where the market is. Sometimes you're going to get filled lower than where the market is. That's just the risks that you have to take when buying market or selling market. So the only way that orders can get filled within the market is from a limit passive order being met by an aggressive order. So a passive seller is going to get filled by an aggressive buyer. A passive buyer is going to get filled by an aggressive seller. And that is how the market moves. If we trade up into a resistance area and there's a lot of passive sell orders, but not enough aggressive buyers to match those orders, well, guess what? Price is likely going to reverse and come back down. If we go into an area of large buy orders and there's not enough aggressive sellers, well, guess what? Price is not going to break through those buyers, and it's likely going to reverse and go back up. Now, I don't want you guys to get this confused where you have to buy or sell every single time we go into a shaded area. I am really only using Bookmap when we trade to my key areas. The reason being, we can break through large areas of buyers or sellers very quickly from one order. For example, today my boy GD was in a trade. He was in longs on the NASDAQ futures somewhere around here, and he asked me, are there large sellers up in this area? The simple answer, yes. Look at all these sellers that we had up here. But again, there's no reason to short price, because all it takes is one or two really big aggressive buyers to get us through those passive sellers. And that is exactly what happened today. So because price was not trading at a potential reject area, I would only be looking for longs in this scenario. And I would use it to understand, okay, well, if we want to go higher, we have to break above this level. If we want to go higher, we have to break above this level. And typically I will use these shaded areas for potential trims on the way up in this scenario. So I'd be looking to trim into this shading, trim into this shading, trim into this shading, so on and so forth. But if the roles were flipped and we were trading at a reject level, then I would be using this to understand there is a lot of sellers at my rejection point. So the only thing I'd be looking for at that point is for price action to give me bearish confirmation and bearish volume to go short. So if I were to short in this area, in this scenario, we're trading at a reject level. If we got a bearish hammer and bearish volume telling me to go short, well, my stop loss would be right above the orders, which in this scenario would be right here. So overall, there's a ton of different ways that you can use Bookmap to identify high probability trades. I've just personally found for me for the last like 3.5 years that I've been using Bookmap, the best way to use it is when we are trading at key levels to confirm that buyers or sellers are truly active at those areas, and to also use the shaded areas of liquidity as potential areas to start trimming your position. So if you guys would like to see more videos on Bookmap as well as order flow, make sure to smash that like button as well as commenting down below letting me know. And also make sure to subscribe to the channel. If you want to check out Bookmap, the link will be down in the description. Other than that, everybody have an amazing rest of your day, and I'll see you guys in the next video.